Good morning. This is December 27th, 2022, and it's, what is it? Today's Tuesday, and it's 8 o'clock a.m. Pacific Standard Time. So, let's see, I got something interesting to show you. So here's a trend line from the beginning. This beginning of the year, very beginning, 2022, right from the start. And it's just started going down. And of course the market does its usual things. It goes down, up, down, up, down, up. And that's what the market's supposed to do. And now we're right here. So what does all this mean? So I just want to show you some charts. Let's see. It's a longer term. All right, so this is back in 2007. So we had a market crash. And just to let you know, the markets always repeat themselves, meaning history does repeat itself. It's just that the only difference is the time frame. You know, the length of time that it takes to correct, and also the chart patterns might have some variations in it, but pretty much they're the same thing. So you can see here that we had a top to bottom. Now this one started in October 2007, where ours started in the very beginning, January. So it doesn't make any difference when it starts. The point is that the charts are the same. You know, this is what you have to pay attention to. So typically we would be right in this area, right below this line right here, because this pretty much did the same thing that it's doing now. And then I put this line here, and that's the same as this line right here. And we're below that line right there. So, and then of course it bottomed out in 2009, and then it started going up from that point and never looked back. Of course it had its corrections in between, but you know, this was bottom right here, and it hasn't seen that bottom since. So let's see here, show you another chart. So again, this is the 2008 chart, 2007, 2008, and we're right below this line right in here. So let's see if I can. So that's where we're at. We're down here, same as here. We're down in this area. Now you can see how the market jumped around and went all the way down here. And once it came down here, then it jumped way back above this line up here, almost hit this line here, and then came back down. So that's what markets do. You know, this one didn't have a spike, and this one did have a spike. So the time frames and the variation in charts may be different, but the overall picture is always the same. Markets go down, they hit bottom, and they come back up. And on a short time frame, you can see this. You can think, okay, here's from 2008 all the way to 2022, and now it's coming down. So short time frames, long time frames, they're all the same. You know, market goes up and then it comes down, goes up and it comes down. So basically that's what's happening here. But you'll see that there's some consistencies here, you know, and so that's where we're at here. We're basically in this area right in here. And if this is anything like this chart, then we're probably going to start seeing some down moves in here pretty soon. And that should happen soon. I mean, next couple weeks, maybe a month at the most, and it should start coming down into this area. And this bottom down here would be down in this area here. So each one of these lines are days. These are all days right here. And so you can see here, we're already into this about a week, and that would put it right about here. So let's say it's going to be exactly like this, but eventually it's going to happen. And whether it pops back up here like this, I don't know. But you have to remember that when these things do happen, it fools a lot of people. Not to say that it's done on purpose, but a lot of people start thinking, oh, we're back up going into a bull market. And sure enough, it comes back down and people lose money again. It's the same old story. But anyway, I do believe that this is all going to happen really soon, and it's going to break down into this line. And you know, like I said, it could happen this week or next week or the week after. I think that's kind of stretching it the week after, but either this week or next week, I think we should start seeing some pretty good downturns in here. Again, time frames are always different, so this could stretch out all the way out to here and then come down. And but eventually it's going to come down. You know, that's just the way physics is like that. You know, whatever goes up must come down. So yeah, so here we are. So we're just paying attention to this area. I have February put options, and even if this drags out for another month, I'm still 2 months away. And I can, like I said last week, you can play this market any way you want. You can be a day trader, you can be a swing trader like I am, and go in for either a day, up to 2 weeks, sometimes a month, or you can be a long-term trader. But if you're a long-term trader, you need to know when to get out. And when this market hits bottom, if I were to go with this long-term, I would say, let's say I bought here or here, and then I would just wait a couple years till it hit bottom or less than that, and then sell, and then start going up long-term. And then, of course, the bull market could be pretty long. It could be 5-10 years, maybe longer. But then that's when you ride it all the way up. But when it gets to the very top of that bull market, that's when you sell. And that's what most people aren't doing. They didn't sell here. They're still hanging on. And when this market eventually hits bottom, like it did here, it wiped out, I forgot what it was, $10 trillion worth of money, of real estate, of retirement funds. Everything just went down. This time it's going to be bigger. They said it could be anywhere from $15 to $20 trillion, even more, be wiped out. And yet people say, well, then I'll just write it back up. Okay, so now they have to wait another 10-15 years until it gets back up to where they were. And by that time, we're going to have inflation again. We're going to have taxes might even be higher. And who knows what. And then they just wasted 10-15 years. And by that time, they're older. You know, so big waste of time. When you can take advantage of these moves now, the market goes up and it goes down. So it's a two-way street. You just don't buy and never sell. You have to sell. And that's how you make your money. Just like I mentioned before, if you own a clothing store or a shoe store and you buy a lot of shoes, you just can't hang on to them. You have to sell them. And you want to buy them low and sell them high. That's the whole idea of this. Very simple. Okay, so this is live right here. This is what's actually going on. And the market basically went... well, let's see, I go 4-hour chart here, give you an idea. what the markets did today. So the market actually went down quite a bit today. It came back up like it's supposed to do. It's supposed to retrace. You know, there's nothing unusual about this. You can see more of a retracement here. This is what the market did. Just came down here and it bounced. And, you know, it could come up here. But eventually it's all going to come down. And if you buy options further enough away, then you can just sit and wait if you wanted to. Or you can play this game like I do and and then ride these waves. I don't do it all the time, but I do it a lot. And when a market comes down and it goes up and it comes down, you can buy, you can sell, or you can just hang on to it. I bought my options here, came down here. I think I sold somewhere in here and then turned them over into the February contracts. So I had January's. And of course, I'm still in the money. I still have made a profit. Again, you don't make anything until you sell, but I'm in the positive. And at this point, I'm just going to wait and see what's going on. Just have a really good feeling about this thing starting to come down pretty soon. And of course, my account's going to grow and grow and grow. And if I wait till February, you know, it might be way down in this area. Way down in here. By the time we hit February, and of course my account's going to be pretty big. A lot bigger then. And I might do that and not sell, or I might just sell when it comes down here, and then when it hits this line, it's going to retrace. And then I'll buy back in here, and then I'll come down here, so I can make twice the money. But I wouldn't advise you to do that unless you have a lot of experience, because you can actually get wiped out if you start timing that thing wrong. And it takes everything away from you. It's a very tricky game when it comes to that. Just hang on. If you bought here like I did, you can just hang on to it. Okay, I think that's it for today. Basically, we're just waiting. We have positions in, and we're just waiting for this market to come down. And in the meantime, there's other things to do in life. You know, I don't have to look at this thing all day long. I could, you know, I have alerts here just to tell me that I could start buying some more options, you know, and I could set an alert here. And then with this one alert, I can walk away. I can go wherever I want. I can even go on vacation. And if this comes up and it breaks this line and it comes up here, well, then I can decide what to do. You know, again, it depends. As this starts coming up little by little, like this did, and starts breaking here, then we're back into a bull market, which 99% chance that's not going to happen. But I still want to be alerted anyway, because if this thing spikes up like this did here, then I can guarantee you that is going to come crashing down, and that would be another opportunity to buy. And that's what happened. What happened here. So apparently this line represents the same line here. This market came down and it spiked all the way back up here. Here's a spike. And guess what? It came straight down and started crashing. And that's the only reason why this would happen. And I have my alert that if it spiked, I would buy again. And then it would come down just like that. And I could quadruple my money. More than that. Okay, so that's it. So we'll talk again tomorrow.